Hello everyone, welcome into Above My Pay Grade. My name is Eric. I wanted to talk today about financial repression. Specifically what the Fed might do to get out of this hole that they're in. I want to use basic numbers today for ease of figuring. I know they're not exact, but for today's story, our country's in $30 trillion in debt. We pay $300 billion, with a B, dollars a year in debt payments, plus $300 billion plus. Now those debt payments are in the form of bonds and the interest rates we pay on those bonds. And for the last couple of years, they've been fairly low. The problem is when the Fed raises interest rates, bond payments can go up too. As soon as they come to maturity, like a 30-year bond, now you owe a new interest rate on it as the government. So government doesn't pay off its debts if you haven't noticed. Our deficit is what we pay in excess of tax receipts every year, and that has gone up every year in my lifetime. So government doesn't pay off its debts. It's just paying interest on it alone, interest. And as soon as the bond comes to maturity, they pay it out and they get a new bond, same amount. So they're not paying it off, they're just paying interest. Why do I say that? The question I've been wondering is, and why I have said multiple times, this doesn't end well, and this time it's different, is because the federal government has to grow their way out of this problem, meaning GDP has to go through the roof, which is a huge problem if we have a recession. Recession means GDP is going down, which in turn means tax receipts are going down. So the federal government, just like you, if you had a bunch of debt, your income has to go up or your bills have to go down. Your income has to go up, and for the federal government, that's tax receipts. And their bills are Social Security, Medicare, Medicaid, and all that kind of stuff. The problem is there's some political ramifications to cutting things. But there's not so many political ramifications to inflating things. And my one question has been, if the federal government underestimates inflation, what they really need is bond interest rates to stay low and inflation to stay high. If you've been watching my channel for any length of time, you know that bond yields are correlated, meaning the interest rate that the government pays you on its debt, if you go buy a bond, it's correlated to supply and demand. So as demand goes down, interest rates go up, and as demand goes up, interest rates go down. Right now, the 10-year bond is yielding 2.68%. And we just had an inflation print of 9. So you don't need to be a mathematician to know if every year I'm getting 2.68% on my money and inflation is 9, I'm guaranteed to lose money. Guaranteed. And where's that money that I'm losing going? It's helping out the government. It's helping the government pay off its debts. Because if they don't have a recession and they have GDP goes up, tax receipts go up, and their bills go down, they need real inflation. They're like 80%. They need some high inflation to pay this stuff down. But they also need at the other end of that, bond holders that are willing to take a bond that is negative real yield. So you ask yourself, who in their right mind would buy these bonds? And that is a great question. That's a question I've been asking myself. And the answer is no one. No one would buy the bonds. So financial repression, what is it? It's when the government comes in and as the theater's burning down, they block the exits. The government's done this before with gold. For 40 years, you couldn't own gold in the United States. Because when things are inflating, the government doesn't want you to run anywhere but the dollar. Because that's part of their plan. It's part of their plan to pay off this debt. So they need people to hold bonds. How are they going to force people to do it? My opinion is they're not going to force the average citizen directly. They're going to force pension funds, hedge funds, etc., to have a mandatory allocation towards bonds. By the way, pension funds already do. And it's all under the auspices of safety. But bond yields have been going down for 40 years. And nobody in their right mind is going to go buy something or have an investment that is guaranteed. Bond is a contract. It's not like you have the opportunity to make more. It's a contract. So you are signing a contract today, for instance, says, I will hold this for 10 years, and the max I can make on it is 2.68% per year. Guaranteed to lose money. Absolutely guaranteed. So who's going to buy it? If that environment persists, no one. But the government will force people to buy it, because you have to understand, the government, when they're paying off its debt, they still have to take on more debt to finance the programs they promised. Social Security, Medicare, Medicaid, the military, all the government promises. So, will the government do this, financial repression, and block the exits? Start watching the news and listen for things like gold is unsafe, Bitcoin is unsafe. Things that aren't the dollar are unsafe. That's usually how they sell it. And this is why they're selling inflation as 9%. We're not in a recession, etc. Because the worst of all the worlds is their tax receipts go down and their bills go up. That's what happens in a recession, by the way. Tax receipts go down, unemployment goes up, people rely on the government even that much more. That's the worst possible outcome they could have. And from a government perspective. From a Federal Reserve perspective, maybe not. But the government could be insolvent here fairly quickly if they just have to keep on taking on more debt to pay off the bills they've already promised. So my money is on repression, financial repression, blocking the exit doors so people can't put their money in things outside the dollar. At least they'll try. And mandating people have a certain allocation of government debt in their portfolio, specifically institutions. And that way, the government's interest payment remains low, inflation can remain high, and they can get our debt to GDP to a bearable point. Because right now we're at 130% debt to GDP. Let me know what you guys think in the comments below. Do you think they'll use financial repression? I think they might. And I'll see you guys in the next one. Peace.